What's good, YouTube? It's your boy Dylan the Trade here, back with another analysis. And this is the start of the week. Today is what, the 19th of March? Yeah, market just opened a few hours ago. And you know, what I'll do is I'll go over what happened last week because I did a video on Thursday, but I didn't do a video after that one. So this would basically be a review of what happened Friday and what I am expecting to happen or what I'm looking for this new week. So starting off with USDJPY, we'll go with last week. So if you remember in the previous video, this candle had a very long wick on Thursday, like coming to the end of Thursday or at the end of Thursday. And I was saying that based off of how this week was forming, it's showing that we have bullish momentum and a lot more bullish momentum in the market. Now, overall, we are bullish, especially when you look at the MA, we're still above the MA. So we are showing bullish tendency. But recently, we've been on a bit of a bearish run, especially if you look at the monthly time frame. You can see these huge bearish candles coming into play. We have this one bullish candle, but then look at the momentum in this candle, it's bearish. So, we've been pretty bearish for the past couple of weeks. So, on Friday ended up being a bearish day, and the market closed bearish. So now that we see this, this gives us an idea as to what we could potentially see happen coming into this week. We could potentially see price continuing to drop lower. Especially with what's going on in the America with regards to inflation trying to decrease. They're trying to devalue the US dollar. So um, this week can be very interesting. So going on to the daily time frame. Let's load up. Okay, good. So on the daily time frame, we could see how price ended up ending. We have an area here of support that price was failing to break below. I like to put my support on the average, which is, based off of these two candles here, come right across, price broke below this area of support. Now, we haven't broken support officially until we've seen another bearish daily candle. So at that point, we can confirm that this daily support was officially broken, especially with how these wicks are. We are seeing a lot of exhaustion to the downside based off of these wicks. So depending on how tomorrow, well, the new candle close, which would be tomorrow, and based off of how this candle close, we could determine whether this support was truly broken or if this is just a tester candle and price pulls back up. But going down to a much cleaner structure, now we're going to be paying attention to the structure. So the daily bias overall is still bearish. Well, we are bullish in this instance. If you take a flip platform here to here, we are still bullish in this instance. But current market is bearish, especially with how this daily candle ends, and the way that the MA is forming, we are pretty much bearish. So going down to a time frame with a lot cleaner of structure, we can see here now. So let's remove this. Keeping clean charts. You want to make sure that your charts are clean, make sure that you are able to analyze everything properly. So, in the previous video, we had price come up to here. I think when I made the video, this candle was still farming. I had just finished farming, and I was saying that we are breaking above this area of resistance, but we couldn't confirm that the resistance was broken because we needed to see a second bullish candle to confirm that that resistance was broken. Overall, though, we were still in this bearish play. Price came up, 50%. Price never broke this low right here. Put this like this. Yeah. So price never broke this low. We kept testing it. Tested here, came back, tested it here, push up. So we were still in this overall bearish play. If we was to draw market structure, you know, market structure looks like this. When you are in a downtrend, you have a lot of lower highs and lower lows forming. So essentially, this is the entire play that you are looking to expect. So we're still within this overall um, movement downwards, but we just have some internal structure that's formed, which is what happened here, which you start to see price create like these smaller highs within this overall previous lower high before we ended up breaking down. But we can confirm that this area has been broken on the 4-hour time frame based off of these two candles right here, this candle and this candle. So I am expecting more bearish movement in the market based off of how um, the week ended last week, especially with the closure of that daily candle. I am expecting more bearish movement. We are coming back into this exhaustion zone though, so this will be very interesting to see how price reacts here. If we break back above, if we do break back above, then that just means that, and we close above this time, this exhaustion zone, you know it could be a retracement back to um, this area of resistance, or if price, like the daily candle, does close above, then it could be that it was just a tested area based off of the daily time frame. So let's see what tomorrow holds. What we'll do is, for the overall larger time frame, I'll mark off this point, this negative 27%, as my you know projected area for price to hit. So just so that I could keep the charts clean, don't really have the fib on. I know exactly where to look for price to potentially hit. Um, but yeah, that's basically that for USDJPY. You know, the weekly is bearish, daily time frame is bearish, forward time frame is bearish. Let's see how the 30 minutes look. So yeah, as you can see here, price came above. We came, we broke above it, but essentially we kind of consolidated here and then we broke back below. Now, as you can see, we have like a lot of tight movements in price. So I will go down to a smaller time frame. But the fact that price, came back below, retested, and then brought back below, an entry could have been placed within this region here. Or even still, we had this point of exhaustion right here on the 30-minute. Price came down, came back up. Yeah, this exhaustion wick as well as these two. If you go down to a 15-minute time frame, we have a much clearer view as to what was happening in this region. You can see a lot of lower highs and lower lows being formed. Price never broke this high, so we just tested it, and then we started a small little counter trend. So we had this mini counter trend that formed right here, but as you can see, we ended up creating a lower high to this high. So that indicates that you know um, more bearish momentum is stepping into the market. Not only that, we are under the MA, and then we have this bearish variation candle pattern that formed right here. Let's put this blue. So your entry could have been literally after this candle. So you could have had one entry up here, and then you could have a second entry right here. You know, your stop would be like right above the exhaustion zone, so that give yourselves like the trade some room to breathe. And then if we pull this down, basically at the end, like the lowest point of that Friday candle, that's a like if you target this low, that's a 1 to 2 is to reward. And then if we have to put it to our expected target, that would be a 1 to 3 risk to reward. Let's go to a 1 hour time frame and see how much that would be. 177 pips. So that's a very decent risk to reward out of that trade there. Okay, so going on to gold now. So as you could clearly see from gold, Friday was extremely bullish. You know, we saw gold just literally just pick itself up and shot straight up. If you go to the weekly time frame, we could end up seeing how gold ended off for the week. We had this point of exhaustion that I had drawn out here, and gold literally just broke through it. We had look at how this candle closed, barely any wick. We barely had any wick to the downside, barely had any wick to the upside. So this was literally just one bullish candle, just straight bullish candle. So that just goes to show, and gold is that pair that is a commodity, a safety commodity. When there is a lot of fear in the markets, a lot of investors put their money in gold. So the fact that we see this huge, massive bull run on gold for last week, that suggests that there's a lot of fear in the market as to the future of what is going to happen. You know, Everybody's saying there's a market crash looming, and the fact that we have this type of bullish movement on gold, you know, we could basically confirm that there's a lot of fear in the market. So it's going to be very interesting to see what is going to happen with gold, especially with the news events that would be coming out um, later on. But if you look at the monthly time frame, we're currently getting into this big area right here, this huge area of exhaustion. The price came in, huge exhaustion, price came back down. Next time price came back in, we had 1, 2, 3 exhaustion candles before price continued to push bearish. So it will be interesting to see what price would do within this region. We might end up pushing back up into it before we come back down, or we just might break it. You know, it all depends on the way the way the economy goes in America, as well as the way just price reacts within this exhaustion zone. But let's go to the daily time frame. So as you can see, price push high, we broke above this area of resistance, and then we didn't even really pull back to it. We just had a pause in the market before price continued to push bullish. Going to somewhere cleaner, maybe we could say cleaner structure. Now remember how I said on the previous video that we could expect gold to continue bullish, mainly at the fact that when price retraced here, it only retraced to a 23.6%, which is a continuation PRZ level, you know, a continuation level, basically. So we bounced off of the 23%, 23.6%, and shot right up with a lot of bullish momentum. And then from there, we take the fib up, where we're still at 23.6%. And then price continue to push higher afterwards. Literally, smashing that 27%, negative 27%. Not only that, you know, price literally just respected this area, this broken resistance, found support there, never broke support. Not only that, we had this, you know, small counter trend that ended up farming. Once we broke that counter trend, if we go down to a lower time frame, as you can see here, we never even broke below this area of support. Let's do it. Yeah, right here. Yeah, we never even broke below this area of support. We literally just kept respecting it, respecting it, respecting it until we ended up creating that higher low, that farm. So we have this, and then we have this here. So once price created this higher low, this could have been one potential area of entry. So let's go down to a smaller time frame where we have a much more detailed view as to what was going on in that area. So as you can see here, price was making lower highs and lower lows right here. So this on a 5-minute time frame is another counter trend that was being formed. Let's do this right here. Yeah, let's utilize this. So we had price here, we tap, tap. So price was making lower highs right in this area, but we were still making higher lows until we ended up breaking this counter trend and form a new high. Once we had that new higher high that was formed, we had a higher low, which an entry could have been taken right here. Once you see this exhaustion, look at this exhaustion candle. That shows a lot of bearish exhaustion that was happening within this region. If you look here, all bearish wicks, all bearish wicks. So you could see like a lot more bullish momentum was happening as opposed to bearish momentum. A lot more buyers were stepping into the market as opposed to sellers. So once you see this bullish engulfing candle, it barely had any wick at the top. That shows a lot of buyers. Could have taken an entry right here. Place a stop below this wick, and then think on the 4 hour time frame we had, based off of this, so we already put high. So the overall projection would have been here. So if we take this up, that would have been an easy 400, well, roughly 400 pips of a trade. And all of that is just based off of noticing what the market is doing and reacting based off of it. Now, I didn't take the trade. I wasn't able to, see the opportunity at that time. Just back testing it, you see the footprints that price leaves behind, and based off of those footprints, you could, create a bias in your mind as to where you expect price to go, and take the opportunity when you see it arrive. Arise, yeah. Yeah, you could take the opportunity when you see it arise, and once you capitalize on the opportunity, you just let your trade do what it has to do based off of the higher time frame projection. You know, we had price in this area here. So, what do I expect for gold in this next new week? Basically, we are extremely bullish. So unless we get some sort of major pullback, we could expect price to continue to push higher. And you can't really say, oh, the market has to pull back, because we've been so bullish, the market has to pull back. Like, the market does have to pull back in time, but it will do that when it's ready. We cannot force something that isn't there. So we can't force a pullback if there isn't any signs of a pullback happening. So all we mainly just have to do is let price do what it has to do, and capitalize when we see the opportunity to capitalize. If we do get a nice pullback, we could potentially see price probably come back into this area here, like right around this area here where price broke above, maybe retest it and then continue to push higher. Or if anything, like how we still haven't created that, well, depending on whether this creates a support uh, area of resistance or not. If it does create an area of resistance, then we can move our fib higher and try to measure the pullback from there. If you do get a pullback, probably to a 38.2%, you know, roughly back into this region of newfound support, then we could potentially look for another bullish move, considering the fact that gold is very bullish right now. You don't want to go against gold when it is on these type of market ones. You will literally get destroyed in the market if you go against the momentum that is happening. So it's just time to be patient. Unless you know how to take counter trend trades, it's best to be patient, wait for a pullback, and then wait for price to give you that signal that it wants to continue bullish. You find your opportunity at that point in time, take your opportunity, and pretty much just ride the wave as it goes. But yeah, that's pretty much the market breakdown for today. Let's see how the week plays out. Probably do another video either Wednesday or coming to the end of the week. But if I do take a trade, I will um, leave those trades on. That way I could go back over them on these videos, and you get to see my thought process while taking the trade, as well as whether the trade played out as I expected, or I end up getting a lesson from that trade. So let's see what the next video holds for us. Later, guys.